when something is offered that makes sense to us and that we understand and offers good value and where we don't worry about losing. And the one problem with the investment business is that things don't come along in an orderly fashion, and they never will.
Investing is simple to understand but difficult to master. Millions of people buy stocks, real estate, or cryptocurrencies every year, yet very few achieve extraordinary results. The difference between amateur investors and the pros isn't luck, it's strategy, discipline, and insight. Today, we're uncovering exactly what professional investors do that most people don't, revealing the habits, methods, and mental frameworks that turn capital into wealth consistently. This isn't theory. These are proven strategies applied by the world's top investors, and they can transform the way you approach money. The first secret professionals follow is they think long-term, not short-term. Warren Buffett doesn't react to daily market fluctuations, he evaluates businesses based on intrinsic value and potential over decades. Most amateur investors chase trends, panic during downturns, and sell impulsively. Professionals ignore noise and focus on the underlying fundamentals. This long-term thinking allows them to harness the power of compounding, ride out volatility, and position themselves for massive gains that short-term traders can never capture. When you shift your mindset to long-term growth, every investment decision becomes more strategic and less emotional. Second, professional investors do exhaustive research before committing capital. They don't rely on tips, social media hype, or intuition alone. Elon Musk studies technology trends and consumer behavior extensively before investing in ventures. Cathie Wood analyzes data adoption trends and sector innovation to identify opportunities. Research minimizes mistakes and maximizes confidence in decision-making. Amateur investors often make impulsive moves without fully understanding risks or opportunities, but pros treat knowledge as their competitive edge. The takeaway before you invest: learn everything possible about the asset, market, and long-term trends. It's the difference between speculation and informed investing. Another strategy is risk management through diversification and allocation. Professionals never bet everything on a single investment. Ray Dalio structures his portfolios to balance exposure across multiple asset classes, industries, and geographies, reducing the impact of losses while capturing growth. Ordinary investors frequently concentrate investments, increasing vulnerability to downturns. Risk management is not about avoiding losses, it's about controlling exposure and maximizing potential. By strategically allocating capital, professionals survive market turbulence while positioning themselves to capture unique opportunities others can't. A fourth secret is emotional discipline. Fear and greed drive most amateur investor decisions, causing panic selling or impulsive buying. Professional investors train themselves to remain calm, make rational decisions, and follow pre-established principles. Warren Buffett famously says, "Be fearful when others are greedy, and greedy when others are fearful." Emotional control allows professionals to exploit market irrationality, buying undervalued assets during downturns while avoiding overhyped opportunities. Controlling your emotions is often more valuable than controlling the market. It turns volatility into an advantage rather than a liability. Next, pros focus on value over hype. They analyze intrinsic worth rather than chasing short-term trends or media-fueled excitement. Buffett buys businesses, not stocks, emphasizing quality, competitive advantage, and long-term potential. By contrast, amateurs often follow fads, buying the latest meme stock or cryptocurrency without understanding fundamentals. Value investing ensures sustainable returns and minimizes the risk of being swept away by speculative bubbles. Professionals understand that wealth grows steadily when investments are grounded in real, measurable value. Professional investors also capitalize on market inefficiencies and crises. When fear dominates markets, opportunities arise for those prepared. Warren Buffett invested billions during the 2008 financial crisis in companies undervalued by panic. Cathie Wood positioned funds to benefit from accelerated adoption of technology during economic downturns. Pros view crises as accelerators, not obstacles, because volatility creates mispricing. Ordinary investors often retreat during crises, missing rare opportunities. The lesson: volatility isn't something to fear. It's a tool for growth when approached strategically. They have a systematic approach to decision-making. Professionals don't rely on hunches. They follow frameworks, checklists, and principles that guide every investment. Ray Dalio documents decision-making rules and patterns, creating a structured method to navigate uncertainty. This reduces bias and ensures consistent performance. Amateur investors often act spontaneously, letting emotions dictate choices. By creating a disciplined process, professionals maintain objectivity, reduce mistakes, and maximize long-term gains. Another differentiator is leveraging compounding strategically. Million-dollar investors don't just reinvest profits, they reinvest intelligently, focusing on high-potential opportunities that amplify returns over time. Buffett reinvests dividends and interest to grow wealth exponentially. Compounding doesn't just apply to money, it also applies to knowledge, networks, and expertise. Amateur investors often withdraw gains too early, limiting growth potential. Understanding the power of compounding transforms ordinary returns into extraordinary wealth over the long term. Professional investors constantly learn and adapt. They read, analyze trends, and study both successes and failures to improve decision-making. Jeff Bezos reads extensively and observes market shifts to anticipate opportunity. Elon Musk studies multiple disciplines to innovate across industries. Learning keeps professionals ahead of trends, allowing them to capitalize on opportunities that others overlook. Amateur investors often stagnate, relying on outdated knowledge or assumptions. Continuous learning ensures that your strategy evolves with markets rather than falling behind. Pros also leverage networks and relationships to gain an edge. Deals, insights, and opportunities often depend on connections. Howard Schultz expanded Starbucks with strategic partnerships, while investment bankers use networks to access exclusive deals. Relationships create access, credibility, and influence, advantages that knowledge alone cannot provide. Amateurs often ignore the power of networking, missing opportunities hidden behind doors only insiders can open. Professionals understand that money moves faster when relationships amplify influence. Timing and patience are critical. Professionals know when to enter and exit markets, sometimes waiting years for the right opportunity. Buffett waits for undervalued businesses, Musk times product launches for maximum impact. Patience allows strategies to mature and for compounding to work its magic. Amateur investors often chase quick wins, sacrificing long-term potential for short-term excitement. Timing, combined with patience, ensures that every move is optimized for maximum gain. Professional investors also use technology and analytics effectively. Tools for market analysis, data visualization, and predictive modeling give them an edge over amateurs. Cathie Wood's ARK Invest uses data-driven research to anticipate innovation adoption trends. By integrating technology, pros identify patterns, validate decisions, and act faster than competitors. Technology isn't a substitute for strategy. It's a multiplier of expertise, allowing investors to scale insights and execute efficiently. Another crucial secret is knowing when to cut losses. Professionals recognize underperforming investments early and exit strategically to protect capital. Jeff Bezos restructured failing divisions at Amazon to focus on core growth areas. Emotional attachment or overconfidence can trap amateurs in losing positions. Cutting losses isn't defeat, it's resource management, ensuring capital is available for better opportunities. The ability to pivot quickly differentiates consistently successful investors from those who fail. Alignment of purpose and capital is another hallmark. Professionals invest in areas they understand or are passionate about, increasing insight, resilience, and commitment. Musk invests in sustainable energy and space because he understands the industries deeply. Alignment ensures that research, intuition, and persistence are focused, reducing mistakes caused by ignorance or disinterest. Ordinary investors often scatter capital without strategy, diluting effort and lowering probability of success. Purpose-driven investment magnifies both returns and satisfaction. Lastly, professionals think about legacy, not just profits. Long-term wealth isn't solely about money, it's about influence, sustainability, and impact. Warren Buffett's philanthropic commitments, Musk's innovations, and Bezos' investments in infrastructure demonstrate that professionals integrate financial success with meaningful contribution. This mindset encourages thoughtful investment, strategic patience, and decisions that compound beyond personal gain. Amateur investors often focus narrowly on short-term profit, missing the broader value created by strategic, purpose-aligned investing. Applying these lessons requires patience, discipline, and consistent effort. Start by setting clear goals, conducting research, and developing risk frameworks. Focus on value, maintain emotional discipline, and exploit opportunities during volatility. Build networks, leverage technology, reinvest intelligently, and continuously learn. Over time, these strategies compound into sustainable wealth and give you the mindset to navigate uncertainty like top investors. The key takeaway is simple. Investing like a pro isn't about luck, it's about process, preparation, and persistence. Professionals make decisions rooted in data, research, and strategic frameworks, turning uncertainty into opportunity. By adopting these methods, anyone can move beyond amateur mistakes, seize high-value opportunities, and grow wealth consistently. Investing like a pro is about discipline, insight, and action, The ultimate playbook for long-term financial success.